What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Wednesday, May 1st. Alright guys, Tesla stock here today down $10.77 per share. That's minus 5.55% in regular trading hours. So a few macro things going on here today and heading into tomorrow just to be aware of on a big blue chip like Tesla. Of course, tomorrow is FOMC day, 2 p.m. Eastern. We get the interest rate decision, 2:30 p.m. Eastern. We get Powell taking the stand. Then we got a little bit of news here today on Tesla. Elon announced that they're cutting about 500 jobs in the supercharger team. So Tesla is down about another couple points here in the after hours. Seemingly as some momentum here just continues. We also got some earnings in the after hours. We got AMD, which is dragging down not only itself, but also Nvidia, therefore kind of the entire market. We got Starbucks cutting guidance, but still, even all that being considered, volume here on Tesla is still relatively low in the after hours. So, take that after hours movement with a grain of salt, but let's take a look at this thing and pull out as much bias as the market was willing to give us here on Tesla today. We'll do a quick analysis of the volume profile. We'll take a look at the psychological levels that we need to pay attention to, that traders are going to be making trades, funds are going to be making decisions based around. We'll take a look at the expected move, and we'll finish out with the directional bias coming out of the chain. So let's start here just with a quick little volume profile analysis to kind of look under the hood here on the 5-minute chart. Listen guys, by the way, Tesla is a daily upload. If you are new here, I appreciate you subscribing to the channel, and I'll keep the Tesla videos coming. So let's take a look here. What I really want to look at are going to be the more aggressive moves, like this little pop and fade off the open. I really want to look at those and maybe this little fade that we got here and see, when we peel back a layer, is there anything to be aware of that isn't obvious by the price action? For example would be, does bias overwhelmingly support the price action, or does it actually look more neutral or even flipping the opposite way? So let's take a peek here under the hood and take a look. Contextual open, if we compare this to yesterday, of course, volume is down. That's as expected, though, compared to what we had yesterday with the news. And really, guys, the open was very contextual. We got a quick fade in volume into more normal volume, and then once we got this drop here, though, I'm not going to lie to you, there is a little bit of bearish bias here. We got a little bit of elevated volume compared to what's expected. Normally, we would expect volume to just hold steady throughout that hour. We got a little bit of elevated volume on primarily red bars, so that is a small amount of bearish bias there, just to be aware of. If I don't remain unbiased, then really what are we doing here, right? Late in the day, we got a couple of those little fades. Fade, pop, fade, and then pop. All right, if we take a look here, we got a little bit of pop in volume. This is just one bar. Too much of a risk of fooled by randomness. I'm not going to assign any bias there. But then we got these, kind of every other pop in red bar. That is a little bit of bearish bias here on those quick little downside moves. And then into the close, that looks like heavy bearish bias. The truth is, it's not. This is very contextual. And then this bar here, that first bar after the closing bell, that first 5-minute bar after the bell, on blue chip stocks, is almost always going to be high with usually very little movement. That's because it's a battle bar. It's rebalancing coming from feds and institutions, triggering by algorithm, and pumping volume through the roof, usually with a wicky, very little movement candle, but volume's still very high because you're having a lot of buys and sells go through at the same time, pumping volume up. So let's move on here. And so really, this bar here, not really anything that I'm concerned with, mostly just looking at the bias that we can pull out throughout the day. Let's move on here now to the self-fulfilling prophecy psychological levels that I'm going to be paying close attention to, and a lot of traders are going to be making decisions off of here tomorrow. We'll start with the 30-minute chart. So looking here at the 30-minute, guys, we did give up the 50 period in the intraday session here today. As the stock faded, that 50 period was also getting yanked up from yesterday's monster day. And, by the way, it's worth considering we finally have a good look at this here on the 30-minute. We of course, we didn't give up the whole move from yesterday. So I think it's important to keep perspective that in the last, 48 hours or so, it's still, here, let's actually run this really quick. The stock is still up about 7.5%. So, listen, I know it's easy to get caught up in the day-to-day swings of things. And especially, these videos are primarily geared toward the following day, every day. That's what we're looking at. But also, it's important to remember context. Okay, sometimes you got to zoom out, even if we're looking at the next day. Still, zoom out and remember what's going on. But we did give that 50 period up here today. So listen, guys, tomorrow, bulls. What I'm primarily looking for, we're currently about 4% away from that 50 period here on the 30-minute chart. Today was a 5.5% day. Tomorrow is, 4% is a big move, but tomorrow is FOMC, along with a few other smaller data releases. So it's certainly within the realm of possibility. Bulls, best case scenario here on the 30-minute would be a high volume reclaim of that 50 period, get back above there, return to this beautiful ascending level of what ideally would turn into psychological support, right? Get up through there on high volume, low volume retest, high volume bounce. Whereas bears, any upside test that 50 period, you want to see a high volume rejection, and bears really your ideal scenario on the 30-minute specifically would really be to get below that 200 period, but keep in mind it is 6.8% away to the downside. Let's move on here to the 4-hour chart and take a quick look. Actually, let's zoom out a little bit. That's kind of ugly to look at when we're that zoomed in. There we go. Now again, we'll take a look at these levels here when we get there on the daily, but on the 4-hour chart in particular, guys, we pulled away so hard yesterday above the 200 period that there's really not a lot specific to the 4-hour that is currently in play. That 200 period is about 6.25% away to the downside still. If that comes into play, a similar situation to the 30-minute chart. Obviously, bulls, we would want to see that 200 period hold as support, whereas bears, you wouldn't mind seeing us crack down through that anyway. It's currently lining up with the psychological level of 170, also something to be aware of. But the truth is, guys, I'm not paying a lot of attention to the 4-hour specifically unless that 200 period comes back into play, which would likely be, which would be on a pretty deep red day. Now, let's move on to the most important chart of all, guys. That's going to be the daily. Okay, we zoom in here, get a little more contextual. So, we are now about 3% away from that 177.50. Really, it's 177.50. This level, by the way, I think of that as 177.50 to 180 as kind of a small channel that creates a bigger level, right? So to the bottom of that kind of full level, it's about 3%. To 180, which is kind of the top end of that level, it's about 1.5% or so, maybe just slightly more. Ideally, I would want to see the top area of that level hold. So bulls, if we test 180, I'd like to see 180 hold, 177.50 kind of being like the emergency level that I would like to see hold. Aside from that, the 50-day moving average is currently down around 175, 175.25. That is kind of a backup level of potential support if that were to come into play. Bears, obviously, best case scenario, break through 180 on high volume, break downside out of that channel through 177.50. However, bears, then you have the 50-day moving average staring you in the face right around that 175 area. So there is kind of a cluster of what could act as potential support to the downside, but bears getting through all that would be a great day for you guys. Whereas bulls, holding that is #1 priority, and getting above each little stair-step psychological level is a great thing to see. So the next area that I'm watching to the upside is really 190. A reclaim and hold of 190 could set us up for a more near-term test of ultimately that big level, which is $200 a share. Now, implied volatility. Okay, compared to the last like 2 months or so, we're now getting down into the lower region. Some would say mid to lower region if you go back a little bit more as this falls. I would say compared to the last month, month and a half, almost 2 months, we're in the lower region. Okay, lower end IV, not necessarily ideal for selling premium. Okay, more ideal for purchasing contracts. That goes for both calls and puts, because you're purchasing while a lot of that IV value is squished out of the contracts. You're not paying up for it. Now, let's take a look at the expected move here on Tesla. The next expiration we have on Tesla is this Friday, May 3rd. The expected move by Friday's close compared to today's close is plus or minus $8.86 per share. Okay, so if we head back to the chart here, we have 3 more trading days until Friday's close, right? We don't have the luxury of daily expirations on Tesla, so we have to do a little bit of math, a little bit of guesswork. Educated guesswork is a better term for it. So we have 886 is the expected move plus or minus by Friday's close. If we divide that by 3 trading days, because there's no one, that's actually a lie. Tomorrow is FOMC. Okay, there's no earnings event specific to Tesla, which creates a single day outlying expectation in terms of volatility. However, I would bet that those options traders are pricing in slightly more volatility for tomorrow than they are Thursday or Friday. So let's do this. Let's run it as normal, and we'll take 886 divided by 3 trading days gives us $2.95, and we'll add 50% back to that to make up for the fact that that original number assumes 3 green days in a row or 3 red days in a row, and that gives us plus or minus $4.43 is the expected move by tomorrow's close compared to today's close. Again, plus or minus. By design, guys, the expected move does not have a directional bias baked in. This is how we pull out the volatility bias, which is a huge piece of the puzzle. So 443, however, I'm going into that with the expectation that there's likely a little bit more volatility being priced in for tomorrow. This is where it becomes educated guesswork, right? That adding that 50% back is already some educated guesswork, and now we're layering it on. Every time we layer on another estimation, the probability of being wrong goes up. But it's also important to understand that fundamentally, that expected move is simply the one standard deviation expected move. So think of that as like the line, like the line for a football game, the betting line, right? In order to make any money, which is another conversation, I don't like to use sports betting as a comparison because it's obviously very different. To find edge, I suppose, is a completely different process, and I would argue a lot more rare in that world. But mathematically speaking, it's a good comparison. If you agree with where the line, or in this case, the expected move is set, if you agree completely, how are you going to position yourself to make any money, right? There's not really anything there for you to do. If you disagree with that, that's a good thing. If you disagree and you say, oh, I think the volatility is going to be much higher, and I'm very much so bearish on Tesla, let's say that's your combination of expectations, well, then you might be someone who's intrigued by purchasing puts because you're looking to obviously be right directionally, but also you're buying puts to capitalize on in appreciation in IV, right? Vega value, realized volatility being higher than the expected volatility, the expected move. Okay, so now the last thing we can do here for directional bias, to pull out data out of the market, we can look at the actual directional bias coming from the options traders themselves here today. So we had just under 2 million total contracts traded here today on Tesla. 1.13 million of those were calls. 864,000 of those were puts. So we are seeing a call side bias, a bullish bias on the overall call put ratio. And, you know, the nature of this video, we're always looking for just the next trading day, a very short-term analysis, right? The 0 to 20 delta range, those are those short-term speculators. 472,000 calls, 315,000 puts. So we're also seeing a bullish bias out of the short-term speculators as well. Listen, guys, hey, if you appreciate these daily Tesla videos, I ask you to do one thing. It takes half a second. It's 100% free. Please just leave a like on the video and then get out of here. Have a good night. I appreciate it, and I'll see you in the next one.